Today we've got setups on the Euro-Canadian dollar currency pair and the department store Kohl's Corp. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Today we'll look at an ascending triangle on the forex currency pair Euro-Canadian dollar and a trading range on Kohl's Corporation. But first we've got a few active trades to check out. Later on this week's trading maxim. Happy Monday, everyone. Let's catch up on the active trades. I'm still holding the trailing stop on the graph right here at 99.04, locking in 21.74 until we get a candle close below the 6,000 level right here, which hasn't happened as of this recording on Sunday afternoon. But I expect it in the next few days, so watch for it. RCL triggered a buy on Wednesday right here and moved almost 3/4 of the way to the target right up here on Thursday and then pulled back, which should be expected after this big 4-candle move right here. So I anticipate this should hit our target sometime this week. So DogeCoin has been fiddling around right above the bull flag right here on less than enthusiastic volume. In fact, the volume is still declining right here. So I'm going to redraw this flag to include these candles. Let me clear this up and move it to right here. Now I think that fits nicely. We'll still wait for a decent close above here with sufficient volume for a buy signal. And that's all the active trades for today. Let's take a look at today's trade picks. Our first setup today is a bear flag on the Euro-Canadian dollar, affectionately known as the Euro-Loonie. Just to be sure everyone understands, a proper bear flag consists of an incoming downtrend like this one here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this one. And the pattern is confirmed by a decline in the volume and the volatility down here. I measure the volatility using the average true range, or ATR. Now here's our trade plan. We'll sell a daily candle close below the bear flag. On the breaking candle, to enter a full-size position, we want to see this volume bar reach up to this volume average right here. If it doesn't quite reach the average, but does reach at least 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by taking this volume number, dividing it by this volume average. You should get at least 0.75. If you don't get at least that much, I suggest you stand aside on the trade. Stop loss is 1.5 times the ATR, and the first target is 1 ATR. So let's say this thing breaks down below this flag, and just ahead of this close you set up a sell order, and you look down here at the ATR, you multiply that by 1.5, you measure that distance above the entry for your stop loss, you measure 1 ATR below your entry, and that'll be your first target. If after entering the trade you get a candle that closes back inside the flag, we'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit, set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I will only risk about 2% of my account on each trade. And that's today's setup on the Euro-Loonie currency pair. Our second setup today is a trading range on the department store Kohl's Corp, which trades on the New York Stock Exchange as KSS. Just to be sure everyone's with us on this, a trading range is a consolidation with a strong support level like this one at 52.30 and a strong resistance level like this one at 64.80. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of a trading range in either direction. And like before, as a nice confirmation of this consolidation, there's a decline in volume and volatility right down here. And as I mentioned earlier, I measure the volatility using the ATR. And here's our trade plan. We will buy a daily candle close above the range or above 64.80, or we will sell a daily candle close below the range or below 52.30. Now, I'm not going to bore you with that whole spiel again. The management details of all my trades are the same. If there's at least average volume, enter a full-size position. If there's at least 75% of the volume, enter a half-size position, otherwise stand aside. Stop loss is 1.5 times the ATR, and the first target is 1 ATR. If you get a candle close back in the range after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. Again, 2% risk on this trade, and that is today's setup on Kohl's Corp. Okay guys, that's how I manage these trades. You do you, okay? Make sure you don't take any trades until you understand what you're doing and that you're comfortable with the setup. And of course, the other side of trading is the psychological side, and to keep a handle on that, I use my trading maxims. A trading maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. You guys know the deal. Use whatever tools you need to help you maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 3. Never bet the farm. You should never allow any one trade to make you or break you. For those unfamiliar with this terminology, when someone refers to betting the farm, they're talking about going all in on a gamble. They're referring to putting up your home or farm on a trade. That is never a good idea. Risk management is what separates the trading pros from the rank amateurs. A successful, profitable trader will never go all in. No trade is 100% sure unless, of course, you're doing something illegal. So no single trade should ever make or break you as a trader. Now, I know some of you are in it for the excitement. That's fine, as long as you realize that you're never going to make a living doing that. You can do it as a hobby, but if you want this to be your business and you want to replace your day job, please listen to what I'm telling you. You're not going to do it by making high-risk trades. The way to do it is the boring way. Build your account one trade at a time. Remember our Euro-Loonie trading plan for today? We're going to sell a daily candle close below the bear flag. And our Kohl's Corp trade plan for today, we're going to buy a daily candle close above the range or above 64.80, or we'll sell a daily candle close below the range or below 52.30. For both trades, take a full-size position if you've got average volume or better, half size if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR, and your first target is 1 ATR. And that's all for today's video. Come back Wednesday, Friday, and next Monday for additional videos. They come out at 3 p.m. New York time, barring unforeseen circumstances. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great week. See you on Wednesday.